All right, what's up, guys? Quick breakdown of the trade we took on Tuesday. Okay, so a nice little short that made some decent profit. But now let's look at why I actually took it and how you could have catched it also. Okay, so this was the chart I was looking at around 8 a.m. Okay, uh, pretty simple. You've got the start of a downside move, but we are still in a major uptrend. But now we had DXY that was shooting up. Um, so gold could have went a bit further below because we've had some pretty decent zone of buys further down. Okay, so the analysis I had was pretty simple. Okay, so for buys, let's start for buys because the main plan was still to buy the dip. Um, let's start with the last impulse, okay, which are this structure. Okay, so not necessarily, you don't need to start your fib from down there. The last one that's gonna be close is from that impulse. Okay, so a couple of ones you could start your fib from this one, and this one. Okay, um, so first fib, you've got the bigger one from there to there. Now, first of all, you got that 38 that's looking pretty good. Then, of course, the 61 right there, which is probably the one of the most perfect zone there is. Um, Major liquidity level, retest of that 4,100 psi level, big 61. And if I'm not mistaken, maybe on the 4 hour, I think we got the 200 moving average. Yeah, so this zone was pretty major to me. Okay, so I had this major buy zone. So right there, let's put it by. Okay, so this was my first buy zone. Then on the 1 hour, let's go back. We can put an other fib. So this fib right there to this high. Now you got the 61 and that 38 that are together. That looks pretty good with the massive retest of that key level. You got the 1 hour 200 EMA right there. So this zone is starting to be pretty interesting to me. And then I just placed my third fib, which was from the last impulse. And then what do you have on top of that? You got the 88 fib. So I've got big 38, small 61, and small 88, which makes this zone very, very, very interesting because you also have the 200 1 hour EMA. You've got the retest of this massive level. So this was another zone that I was pretty interested in for buys. Okay, so these were the two major zones. And then if you go on the small time frame, there wasn't really a zone that was interesting for buys, to be honest. Maybe that one. Okay, so a retest of that major wick plus kind of structure right there, but it was too soon to add a small time frame zone because we don't have a retracement yet, so we can't place a fib. So for now, my big buys were only this major one and the other one down below. Okay, and so now for shorts, pretty simple. We can only analyze this last impulse. Okay, so this structure was the structure I was looking at for shorts. Start your fib from the high right there to the new low that was created. So right there, I'll just erase those big fibs so it's not that messy anymore. So you got this fib. Now a couple of zones that were pretty interesting. Okay, so there was that 38 fib, which was okay, not the best, but when you take that trend line right there, so something like that. You got the 15 minutes moving averages. You gotta start your trend line maybe more like this, yeah. So this was an okay zone to watch. Okay, you got the retest of all these small wicks also. So this was a zone that I was potentially monitoring. So retest of that, small 38. So that was a nice sell zone. Also, you can even add a smaller fib, maybe from. There's a lot of impulse you can start it off, but on a small structure, to be honest, I'm not a fan of having loads of fibs, so I tend to just stick with the big one. As opposite of on the big structure, so like this major buy fibs, and we can have lots of them, but on a small structure like that, better stick with only one, so no other fibs. So this was my first short zone. Then there was the 50 fib that at first caught my attention, but then I was like, it looks kind of too obvious. Okay, you got all of these wicks right there. You got these two easy wicks. Okay, so this big wicks, I mean, it was basically free liquidity. So I'm like, no way the 50 is gonna be that easy. So I actually did not left the 50 on my chart, and I went on the 61, because as you can see on the 61, there's lots of liquidity, but it's a bit more hidden. Okay, so you got this big wick right there, loads of reaction around that price. So this wick right there, this wick right there, this one, and then of course there was big liquidity right under it. So if we break that, target that nice level, we could have had a decent reaction also. So my zone was started from a bit before the 61. Why? Because I mean, zones are all those confluences at around the same price. So yes, you got the 61, but we cannot forget those major wicks, okay, that serves as a pretty good key level. So my zone started a bit before the 61. So this was my 61 zone, so something like that. And then third zone was the 88. Okay, so as you can see, every time we touch that price, we get some kind of reaction, so it was pretty good. And then 78, not a fan, but 88, I mean, lots of liquidity plus 88 fib, always good to mark them. Okay, so these were my 3 short zones, and that's it. Okay, so I was either waiting for price to shoot down for a good buy level or a nice upside movement to get those shorts. So looking at the 15 minutes, let's go on the 5 so we can see structures. Let's go, I think it's like that, forward, yeah. So on that, okay, first touch of R38, absolutely no structure, so no real way to get in that trade. Okay, so we are waiting for another retracement plus structure, and then priced simply just when we retested that, I was waiting for a close under that trend line for the level to be interested. We did not have it, so I was waiting for another close of that, but then we just straight went through it. So the zone was not interested. It was not interesting anymore. Okay, so now I'm waiting for my next zone. As you can see, basically free liquidity right there. Okay, we got those eyes that are way too easy to spot. So probably lots of shorters were putting their stop losses right above it. So when it's too easy to see, as you guys know, I'm not interested. But that zone a bit higher up, okay, so we would grab also this small liquidity right there, was pretty interesting. Okay, so let's forward a bit. Price moved up, and without any surprise, we broke through that level pretty easily. Now we touched our zone. A couple of people asked me if it was valid since we didn't touch the 61. Yes. Okay. Why? Because our zone starts before. There's a reason I started my zone before the 61. It's because there's a super nice key level right there. So 1 wick, another wick, another wick, and then there was loads of liquidity to be grabbed, basically free at those spots. So this was the next key level, and then you got the 61 as well, but it's a big zone. Okay, I started my zone before because of that key level. If there was no key level, then yes, of course, I would have started it probably right there. But because of those wicks, I started my zone a bit before. Okay, so like that, we touched our zone. Now, only thing I'm waiting for is a structure. So you got the first candle, then the second candle right there, then the third candle. That can go, yeah, the third candle. So now I want to short. Okay, so we got a decent reaction on our zone. I want to short, but I cannot just straight jump into shorts after that candle. Yes, you could have shorted at around that level. It was pretty risky and very aggressive, but as you might know, when we get some big liquidity grabs like this, I tend to love to short or buy a bit aggressively because moves can happen super quick. Okay, but in this case, I didn't have the balls this morning, so I preferred to wait for the fourth candle. But if you took it around that level, it was very good because there was a big liquidity grab. Okay, so if there was no grab, then no. Okay, it was not valid to jump aggressively, but it was valid to do it if you did it because we've had a grab. Okay, so now next candle we need to wait for a nice retracement to get some type of a structure or an entry that fits our risk. Okay, but then the next candle continues to fall down. So now I'm like, okay, so what would be the best price possible to jump in that trade? Because now I'm really interested in shorts because I noticed that this zone is reacting super strongly. So what would be the best area to jump back in the trade? Pretty simple, right? We went and grabbed all this free liquidity. A retest of that level would be perfect. Okay, so now you got some kind of zone. Okay, starting from right there, you can even add a super small fib. And you can see that there's a 61 and we are currently reacting on it. Okay, so you can actually, this was the liquidity level maybe a bit further down. Okay, it was like that, or you can put it like this. Okay, so retest of the liquidity level, sorry. We are seeing some nice reactions. So we got this wick. Now this wick closed below this wick. Now I'm waiting for the third candle, okay, to see if we are currently still rejecting that small 61 and the retest of that broken level right there. So next candle, boom, we've got another nice reaction. Where did I entered? Pretty simple, okay. I did not entered right after the close of this blue candle. I waited for the price to actually move a bit with that candle to let me see that price was interesting in moving down. Once we've got the grab of this major wick, okay, so right there, grab this wick and then went back below the 61, I think at like 9:53 or 54, around a minute before the candle closed when price was around there. I decided to enter with about a 30 pips stop loss. So I decided to enter around there. My stop loss was not all the way up. It was just above that those wicks right there. So yeah, around 30 pips. And then my take profit, well, pretty simple. Okay, you just do some buy zone. So now you've got an eye. You can trace your fib from the last low to the new high. The next buy zone, to be honest, for my take profit, well, there's 4,200, which is not bad, but the main take profit for me was right there. Okay, so this major buy zone, there's a 78, there's a retest of some major liquidity. So for me, this was a take profit level to potentially even buy as well. Okay, so it doesn't want to change color. That's nice. All right, it's now green. So now my take profit was around that level. So for 300 pips of profit, it's a nice 1 to 10 of risk to reward. So now let's see what happens. Okay, boom, boom. So now, once we've got this wick, okay, right there, once we reacted and broke those 2 wicks, I decided to move my stop loss to break even, okay, but not before. I was waiting for a break of that small level, so right there, okay, so I was waiting for a break downside of that. So actually, when I saw that price reacted kind of strongly on that, when price was around that level, I decided to put myself to break even because there was still odds that price could have moved up and then went to our second short zone. So I protected myself with the break even right there. And finally, price decided to completely melt down. Okay, so it was one of the easiest trade ever. Super quick, super nice trade. Take profit was it right there. I had some conviction because the DXY was still moving up that we could potentially reach this zone as well. So on this level, I decided to get out 50% of my position. So I exited about 6 lots, I think, with around $20,000 of profit. And then I decided to target my next take profit to the second buy zone. I would have probably closed a bit more if I saw a buy structure, but if there was no structure, I would have held to that level, which exactly happened. Okay, no buy structure at all. Price decided to keep moving down, and at that price, I think my P&L was about 40,000 of the position I was left with. So I closed another 50% at that position. So now I had a runner of around 4 lots, around that, so 3 point something. And I decided to hold the rest for maybe my final zone of buy to around that level. But decided to not to buy because the timing wasn't right for me. Okay, around 11, I don't like to trade after that. So I had closed basically like 70% of my position. I bagged around $40,000 total off of that. And then I was waiting with my runner for price to continue melting down. But then the market decided otherwise. Okay, so it built a nice structure. To be honest, it was not super easy to catch because your risk would have been to be a bit big. Okay, so it was not super optimal to catch this buy. Also, it was not in the right timing to me. So I decided not to take it and decided to hold my runner that actually got stopped to break even. I think it was either during the day or overnight. Okay, I think it was overnight or something like that. But price decided to move back up and stopped me out eventually at break even. So I lost about, I think it was like a $20,000 runner. Okay, so I had a potential to make around 60K if I would have closed it 100%. Did not, left a runner because I thought that price could have went a bit further down. So I left around 20K on the table, but that's how you get those massive runner. Okay, you'll get loads of break evens, and of course it's gonna happen sometimes. And then once you're right, then you'll get that $100,000 runner. Okay, but to get those big fat runners, you need to accept the fact that you'll get some break even as well. Okay, so sorry for the long video. If I was too boring, then just speed up the video. But I'm sure you could have learned a thing or two in this video. So take care, guys.